Well, in the past 3 years, markets have enjoyed some considerable gains, a lot of that in the U.S. market, driven by the so-called Magnificent Seven. There is another sector that's had even better performance over that stretch, and that is stocks known as clean power names, a group that includes a range of different players, including Constellation Energy and pg&e. According to Bloomberg Intelligence, they posted higher returns in the 3-year period than the Magnificent Seven stocks. For more on what was driving that, Andrew John Stevenson is joining us, covers that sector for Bloomberg Intelligence. Thanks very much for being with us. That might surprise some people just because we talk so much about Mag 7 names and a little bit less about clean power names. What were the catalysts for the increase over these last few years?
Sure. So we've seen two major tailwinds for this sector. The first being the IRA, which basically allowed them to make money on things that they already do and do well, which is deliver clean power to the grid, basically lowest emissions per kilowatt. And second is AI, which, this obviously tech is an AI play, but the kind of reverberation of AI is that they need more power, and they need a lot more power, about 5 times the power growth that we've seen over the last several years. So this is a significant increase for them and a bump for them in terms of their ability to grow their business, where they've seen almost no growth over the last sort of 10, 15 years.
I wonder as well, with all this talk about AI and all the power needs that are associated with that, has this sector benefited beyond just things like the Inflation Reduction Act that you talked about, just this constant conversation around where's the power coming from?
Yeah, it's a really hard puzzle to solve, right? We're looking at a significant, again, a 5 times increase in power. So everything that they can throw at the problem is helpful in terms of new power, putting it on the grid. Especially if you put clean power on the grid, you're getting paid almost 3 times. You're getting paid from power demand going up. You're getting paid by the IRA for producing clean power. And you're also getting paid on your CapEx, which includes not just the renewable investment, but the grid. So you're getting kind of a triple benefit there, and that's really helped these stocks over the last several years.
Are there any wild cards investors should think about when it comes to this sector? Because I remember just a couple of years ago when everybody was talking about the clean energy boom and the surge that we saw in the stocks, but some, including some here in Canada, have had ups and downs. What are some of the things to think about if you're investing in this group?
Sure. This is the power sector itself. So the renewable sector has had, as you say, a lot of ups and downs. But the investments that you're making in clean power, just to give a simple example, if you put $1 billion of capex into renewables, you get that whole billion as a utility company, and so that's a great benefit. Whereas if you build a gas plant, only about half of that you get paid on, which is the actual capex. The rest is fuel, and you don't get paid on that. So these companies have had a really nice tailwind from basically spending more money on the clean energy and the boost that they're getting from the IRA. So I mean, there are obviously some problems going forward, maybe politically with the IRA, but the benefits is really across the board in terms of we need more power on the grid. And so any incentives to increase power on the grid, I don't think are going to be as contentious going forward under either presidency.
And just looking at the numbers, where the money's flowing in terms of possible business opportunities, like are there specific companies that you're watching within your coverage area?
So, I mean, just to give you a list of those, so Con Ed, NextEra Energy, pg&e, Constellation Energy, and Public Service Energy Group are, 5 of those companies. Again, they all seem to have, similar tailwinds that they had 2 or 3 years ago, which is they're being incentivized to put more and more energy on the grid as quickly as possible. And that's usually, for a utility sector company, you get paid on capex. So when you're being pushed to put more capex to work, you should be able to make more money. So this does seem to be, it's certainly affecting all the power companies, and you're starting to see more power companies beyond these clean ones seeing better returns. But the real long-term benefits to the shareholder are from having sort of 3 ways to make money, which is what you're seeing in these sort of clean power companies.
Okay, really helpful breakdown. Thanks very much for sharing the research with us. Andrew John Stevenson from Bloomberg Intelligence on the clean power plays.